stocks and look at their 1-month chart or maybe even a 3-month chart, there has been an uptick in sugar stocks in the last few weeks or so. Look at the sharp rise that you're seeing all through October in the price of Shree Renuka, and all the other sugar stocks will come up for you. The rise is something which Narendra Bansal, our head of research, pointed out ahead of the curve actually, smelling a rise in global sugar prices. For these and other issues, we're being joined by an expert. Abinash Verma, Director General of ISMA, the Indian Sugar Mills Association, is joining us, as is Mr. Narendra Murkumbi, the Vice Chairman and Managing Director of Shree Renuka. Gentlemen, good morning. Thank you very much for joining us. Mr. Murkumbi, first to you. Are the global sugar prices going to give sugar manufacturers, especially global ones like you, some hope in 2016 and the last quarter of this year?
I think many respected analysts had been forecasting a deficit in 2016 calendar year after 3 years of consecutive surplus. And I think with the expiry of the October futures contract on the New York Exchange, this view has now gained a kind of consensus in the market. Sugar prices on the global market have moved up by about 17% in the last 1 week. They're also being helped by a more positive commodity environment. I think crude has bottomed, the dollar is weaker. But overall, 2016 on the world market looks to be a deficit year. There is only one event which is yet to be crystallized, which is what happens with the exports out of India. I'm pretty confident now that export parities are close to domestic prices, and the sector, the industry as well as the government are determined to export a significant amount of sugar in the coming year. And with that, I would say that domestic prices would also follow the global trend. They've already started moving up. From a bottom of about 19,000 rupees a ton in July, we are now at around 25,000 rupees ex-mill. So I would expect some further correlation between global prices as well as with domestic prices.
Okay, so there has been a move in domestic prices already, but let's get Abinash Verma into this discussion. Abinash, now that global prices are rising, do you get a sense that the worst of the downward cycle in global sugar prices is behind us?
I believe so, and I think Mr. Murkumbi is the right person to actually give an idea of that. And I'm seeing that almost all the global experts, all the global agencies are now predicting a shortage, a deficit in the next year. And therefore, from India, we can look to export some sugar.
Okay, Mr. Murkumbi, come in on that. You told us about the domestic prices. How much exactly have the global prices gone up? And do you get a sense that, the worst of the downward cycle is behind us?
Well, globally, for sure, I think the bottom for the market, world market, was 10.15 cents. Right now, the market is trading around 13.6 cents, almost 30% up from its bottom in July. Domestic market, while, as I said, prices in Maharashtra have moved up from 19,000 to the current level of 25,000 rupees. We are still at a negative margin. So compared to cane prices, we are still negative. Of course, the loss has reduced quite significantly. And if the world market continues its trend, I would see strong exports from India. We have a surplus of about 4 million tons in the country. If we could export a significant portion of that, which now looks more likely than it did 2 months ago, then I think domestic prices also should go to a level where EBITDA margins would be positive in the coming season.
Is it cash positive to export at current prices of that 15 cents that you were talking about? Or 13 cents?
Well, there is a loss, but as you know, the government last month has notified a plan of compulsory exports, mill-wise allocation. I believe the government's policy for the next season is a work in progress, and we may see further announcements on this, especially after the Bihar elections are over and when we are about to start crushing. Given that we expect some positive support from the government, I'm quite hopeful.
Okay, then on that point, well, let's get Abinash in on that point. Abinash, you would have your ears very close to what government is thinking, both in terms of sugarcane arrears, exports. What are you picking up in terms of possible relief that the government is contemplating?
See, let me clarify one point, and I don't think the traditional export subsidy that we used to get will come ever in future, because I mean that was not WTO compatible and that was not really helping us, because the government subsidy in the last 2 years we saw came on 28th of February or 27th of February, which was very late. It was not enough, and therefore we could not export. We need to understand, and I think there's a realization within the industry, and as Mr. Murkumbi pointed out, that if we export whatever 15% of the surplus that we have, 15% of our production, if we export, we recover it from the balance 85% that we sell in the domestic market. And if you look at the current negative, that the losses that we would suffer on the exports, it would work out to just about 1 rupee 25 paisa per kilo of domestic sales. Therefore, if the domestic prices improve by 1 or 2 rupees, we would have recovered the losses that we would have incurred on the exports.
Okay.
So therefore, I don't believe that the government may come out with any export incentive in the traditional fashion. But you asked me on the cane areas.
Yeah.
Now, we have told the government from the industry side that you have increased the cane price by a very, very steep margin in the last 5 years by almost about 70%, and it is now beyond us. The prices are not kind of supporting this kind of price, this kind of cane price. CACP has recommended a formula saying that if the cane price paying capacity of the industry is below the FRP, the government should create a price stabilization fund to bridge that gap. And that is what we are pursuing. That if the government wants to support the farmers with a higher cane price, they need to directly pay to the farmers some amount so that the industry does not suffer any further. And we expect that the government might kind of come out with some support to the farmers directly.
And when do you expect this to happen? Any timetable?
That's anybody's guess, but obviously the Bihar elections are on the way. So we believe it should be somewhere in November. We expect some announcement from the government.
Okay, gentlemen, just stay on. We have a couple of more questions for you, but we have to take a mandatory break, so we'll do that and be back in just.
Welcome back. Well, very quickly, markets at this point in time back in the green. I just wanted to point that out. In early morning trades, it was mildly in the red, and now it is mildly in the green. And mid-caps, as Anuj was predicting, are the outperformers with about 0.33% in terms of gains. And the Bank Nifty has done a U-turn. After being about 0.5% in the red, that index is now moved to flat terrain. We've been speaking with Mr. Abinash Verma, Director General of ISMA, Indian Sugar Mills Association, and Mr. Narendra Murkumbi, the Vice Chairman Managing Director of Shree Renuka Sugars, on this happy prospect of global sugar prices finally seeing an upturn of about 30%. Okay, Mr. Verma, is that the only part that you are expecting, that the farmers could be given some direct support on the lines of the CACP advice, or are there any other measures you are expecting or are in discussion with the government?
I think that is the best solution, and that is what we are expecting. And the whole crux of the problem of the Indian sugar industry is a very high sugarcane price, which we are not able to afford. So if the government wants to support and give the farmers a high price, that's a social welfare program. And if the government fills in that gap and gives it directly to the farmers, that is the best solution, and that is the only solution that probably will help the industry move forward from here. Because then you have a viable industry.
Yeah, but the high price is actually being dictated by the state governments. Will the central government fill in?
See, but if you look at the state governments, I think only Uttar Pradesh is the biggest problem. Otherwise, Uttarakhand, Punjab and Haryana are not producing much sugar. Tamil Nadu is not a mandatory state advice price. The other states don't announce a state advice price. Now, if you look at Uttar Pradesh, in the last couple of years, Uttar Pradesh has kind of helped the industry. Last year, they have given 40 rupees per quintal, and therefore the industry in Uttar Pradesh has paid 240 rupees per quintal of sugarcane. So there is more and more, I would say, response, more and more responsible kind of action from the state governments also. Now, if the central government kind of bridges and says, okay, the industry is unable to pay, say, 230 rupees per quintal of FRP, and the industry is able to pay 220, and that gap is bridged by the central government, it's going to be very difficult for any state government morally to ask the industry to pay a higher price than 220 what the central government establishes.
Okay, Mr. Murkumbi, one final question to you before we wrap this discussion. Sugar production is expected to fall because of the weak monsoons, but how much will it fall this year? How much are you expecting production to fall next year? And at what stage of the sugar cycle are we in currently?
Well, we've had 5 years of continuous record production more than domestic consumption. This year, I think we've just revised our estimates downward to 27 million tons. Planting intentions for next year, there is some problem with water availability in large parts of Maharashtra and some parts of Karnataka, and I would expect on the whole that planting would be lower than the current year, but it's too early to tell. I think November to January is the period when planting happens.
Your numbers, Abinash?
Same, I mean, he's talking about ISMA's numbers, so 27 million this year.
Okay.
The consumption is going up, that is the best part. So the numbers are getting very closer, the gap is not very large, the surplus will not be very huge in the next few years.
All right, Mr. Murkumbi, Abinash Verma, thank you very much for joining us. So a long bitter period for the sugar mills and the sugar companies perhaps is ending, and some sweet times if the demand-supply equation were to be in their favor in the coming year. On that note, actually, let's look at the commodity prices. That market opened about a couple of minutes back. Let's